What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, I came across this phenomenal article yesterday that talks all about the fundamentals behind AMC, the chart action, technical analysis, where the fund ownership lies. If you've been watching my channel for quite some time, you know I always try to follow what the institutions are doing with AMC. And then there was something that really correlated and stuck close to me because it coincides with my belief on exactly where that first barrier level lies with why the price of AMC has been suppressed a little bit. At the end of this video, I'm also going to talk about why the price is still hanging above that $30 range and break everything down for you. So stick to the end. Let's get right into it. First off, the article is from Investors Business Daily. It is titled, "Is AMC Stock a Buy Now?" And the first thing I have highlighted here, I'm going to break down very closely for you. So for a while, I have been saying that retail is shorting AMC. And I don't mean apes. I don't mean your average, traders. I mean professional traders. There are professional traders out there that have all different trading styles. Some people swing stocks, some people scalp stocks. All right. Some people play options. And then you also have a group of individuals that short stocks. And that's all they do. They search for stocks that have gone up parabolically and they slowly build a short position to take it down. And I've said this for a long time. I've covered this in my video saying that it is a day trader's paradise because AMC has that range and it is so predictable. And a lot of these professional traders who don't care about any type of movement, okay, or what the hedge funds have done, all they care about is providing for their families and putting money in their pockets, have been shorting this stock. And take a look at what this article highlights. Data from brokerage TradeZero America, which you can go take a look at this. TradeZero is a retail brokerage, and it even highlights one that has numerous amount of shorts available, something similar to Cobra or Centerpoint. Talks about TradeZero, and it says AMC was the third on July 23rd. Pay attention to these dates here. July 23rd, after the run-up, AMC placed third among stocks trading at least $10 a share and getting sold short the most. Total of over 14,000 short sale trades, not shares, actual trades, crossed the platform at an average price of $38 a share. AMC then ranked number 2 for the weeks ending of August 27th and September 3rd. In the latter week, the broker executed 8,400 trades at an average price of $46. Week ending September 17th, 8,500 short sale trades, average price $48. Yet right here it says, yet are the shorts showing fatigue? Data for the week ended October 15th shows AMC seeing only 2,600 short trades on the platform at an average price of $39.62. And in the latest weeks ended on October 29th and November 5th, AMC completely disappeared from TradeZero's top 10. Now, TradeZero is just one brokerage, but it gives you an idea. And it also says shares remain above an August 5th low of $29. And in early November, AMC is winning a battle to regain the north side. So what this says to me right here is retail shorts are slowly not building their positions anymore and or have taken some profit off the table. As you can see right here, it went up to $46. It's currently sitting at $40, took some profit off the table and moving on their merry way because the risk reward for these short sellers is no longer there. All right, they built their positions in the 60s. We can take a look at the charts very quickly. They built their positions up here in the 60s, took it down a little bit, probably took some profit. It went back up to 52. They probably built it up again, maybe took a little bit profit, and they're trying to do it again, but they can see that we had strong support at 32, strong support at 36, and we've got even more support at 38, and the price is sitting at $40. Their risk reward is not there. It's only going to be a 10% gain. However, their downside, which it would happen if the price rises, is exponential. And they can see the buying pressure that's behind AMC. So, the reason why this relates very closely to me is one, I knew that retail was shorting this for quite some time, but retail is also going to be the first one to go. It's that first barrier before eventually the hedge funds will be closing their positions. I've said this for a long period of time. The hedge funds did not get to a point where they were overextended. The price of AMC rose parabolically to $72. The next day, AMC had announced that it was going to do an offering. The price went down. It hung around $60. They were over leveraged. A lot of them added to their positions, but it didn't get to a point to where they were overextended. I had said for a while, once the price gets up to that 90, 95, 110, $120 level, that's when these big funds are going to slowly close their positions. And it's going to start with the smaller funds first, just like a couple of the smaller funds had closed their positions in GameStop back in January when it rose up to over $500. But before all that is going to happen, it's going to be the retail short sellers. And while retail only makes up for a very, very small percentage, it still suppresses the price down. So when retail stops shorting this stock because their risk reward is off, that's going to help the buying pressure continue for AMC going up. And when they begin to get overextended, which for a retail trader, in my opinion, 10% down, 20%, 25% down in your position, which would mean the price going from $40 to just $50 would really put me in a position to be like, you know what, I need to get out of this because it is going against the direction that I want this to go. So I hope that this kind of correlates a little bit with you of why the price is being suppressed a little bit. Now let's get into why the price is still hanging high. I've said this numerous times that AMC is not done. Look at this chart right here. This is almost like a monster bull flag setup. I talk about this in the group all the time when there are certain stocks that do well pre-market or they rip up out of the gate, but they hold. And I always say, look for a power hour or after hours runner because it's holding support. It never broke down. If this were to break down to $20, $15, I might, we won't be talking about the same thing that I'm saying right now. But let's talk about now this to the upside. So first off, this is, like I said, this is a great article. I'm not going to go through everything, but please read it because it's very unbiased. That's what I liked about it. But AMC stands at 1.8 times the daily average volume of 54 million shares. The total of 89.6 million shares sold short. So the short interest swallows up about 19% of the stock's entire float. It is still a hefty amount. Talks about the fundamentals behind AMC. It's very unbiased, like I said, with big sales expected to arrive, expect cash flows to improve. It also talks about this, and this is where I talk about why the price is being suppressed. And if you remember in my videos, I've also covered market beat numerous times, which I think last time it was, 562 million bought. Now we have 701 million institutions on the buy side. Check this out right here. Mutual funds owning a stake in AMC have jumped to 462 the end of September quarter, okay, that just passed, versus 190 in quarter 4 of 2020. Impressive growth here. In other words, professional portfolio managers appear to be accumulating shares. Another fact as well, a 99 relative strength rating on a scale of 1 to 99 means that AMC stock has outperformed 99% of all stocks in the IBD database over the past 12 months. Strong long-term performance indeed. And lastly, this one right here. Plus, despite the recent downdraft, the accumulation distribution rating shows an excellent A+ grade on a scale of A to E. And if you're asking what exactly that rating means, take a look at this right here. A rating of A or B indicates that funds are buying or accumulating the stock. Okay, and this has an A+ rating. And I talk about this all the time when it comes to our day plays. And I'll even give you a couple examples of some of them that ran just on Friday. We could talk at this one, ticker symbol MARM. I say when you see the stock sitting in these areas right here, holding above support, those are accumulation zones. All right, that's where they're doing two things. One, they're trapping shorts, and then buyers are continuing to accumulate. The play's not over until it gets down here, okay, which in AMC's case, it's totally different. The play's not over until the funds actually close their short positions. But that's exactly what's happening with AMC. So it might take a little bit of time. Like I said, this article is very unbiased. It talks about it potentially taking a few more weeks or months. It does also talk about the downside. Like I said, it has to be unbiased. But there's a lot of bullish sentiment in this article. And I felt like this one just really related to one, the first thing I talk about when it comes to retail shorting, and then also the fact that, these big institutions, they know a lot more of what's at stake when it comes to this stock, and they're continuing to accumulate and buy this stock. So guys, that is it for this video. I'll see you in the next one.